Hello, I'm Eric.
And I'm Rylan. Today we'll be analyzing financial ratios from Kraft Heinz and Mondelez.
Kraft Heinz is the fifth largest food and beverage company in the world with 8 $1 billion brands. They work to provide high-quality food with great taste for every occasion.
Mondelez is an international American-based food and beverage company. It is actually a spin-off from Kraft Foods, and they specifically target quality snacks.
The first ratio that we decided to do was gross profit ratio. As you can see from the chart, 33.96% of Kraft Heinz's revenue became a profit, while 39.91% of Mondelez's revenue became a profit. This means that Mondelez has a better return on their net sales.
The next ratio that we looked at was return on assets. This measures the income of the company on each dollar invested in assets. This tells us about the financial stability and efficiency the company uses for their assets. Kraft has a negative 9.17%, which tells us they are losing money per asset. However, Mondelez has a 53.74% return per asset of the company. This is over 5 times the rate, as you can see on the graph.
Profit margin measures the income earned on each dollar of sales. From the calculations, this means per every dollar of sales for Kraft, about 39 cents goes towards the net income. For Mondelez, only 13 cents per dollar goes towards the net income. This means Kraft is making more dollars of sales than Mondelez.
We also looked at asset turnover, which measures sales volume in relation to their investment in assets. For every 24 cents in annual sales, Kraft invests $1 in assets. Mondelez has a higher ratio with 41 cents per dollar, meaning they are investing more in total assets.
We then went on and did return on equity, which measures the income earned for every dollar in stockholders' equity. The calculations show Kraft earned 17 cents per dollar and Mondelez earned almost 13 cents per dollar. There's not much of a difference, but Kraft does earn more per income earned.
Receivable turnover means how many times on average a company collects receivables during the year. It is net credit sales over average accounts receivable. The average collection period is the turnover ratio turned into days. So throughout the year, Kraft collects receivables more frequently with 15.44 times per year over almost 24 days. Meanwhile, Mondelez collects them less at 9.26 times per year over 40 days. It takes them on average over 1 month, so it is slower to process.
The next ratio we calculated was inventory turnover ratio and average days in inventory. Inventory turnover ratio measures how many times on average a company sells its entire inventory during the year. As we can see, Kraft Heinz, 6.39 times they sold their entire inventory during the year, and their products only spent 57.09 days in inventory. Mondelez was very similar in that 6.05 times they sold their entire inventory during the year, and their products only spent 60.33 days in inventory.
Then we studied current ratio, which compares current assets to current liabilities. A high current ratio indicates that a company has sufficient current assets to pay current liabilities as they become due. Kraft has $1.21 for each dollar in current liabilities, so they can pay off dues as they come in. However, Mondelez has 45 cents per dollar in current liabilities, so they cannot pay off their dues as fast as when they come in.
Another ratio that we analyzed was the asset test ratio, similar to the current ratio, but a more conservative measure of current assets available to pay current liabilities. As we can see, Kraft Heinz has a ratio of 0.43 to 1, and Mondelez has a ratio of 0.626 to 1. Both companies appear to have not enough liquid assets available to pay for current assets as they become due.
Debt-to-equity ratio explains a company's ability to pay its long-term liabilities. The higher the ratio, the higher the risk of bankruptcy. This means that Mondelez is a little bit more aggressive when it comes to their financials. This difference is further indicated by the graph.
The last ratio we calculated was times interest earned ratio. This compares interest payments with a company's income available to pay those charges. This means that Kraft's income before interest and taxes was 9.82 times the amount needed for interest expense alone, while Mondelez's is only 8.99 times of the amount needed.
With all of this information, we have built a strong understanding of the financials in both companies. Kraft has improved throughout the years, as the net sales indicate on the graph on the left. They have proved to have safe investments with debt-to-equity ratio and times interest earned ratio. However, in 2018, they took a net loss, which hurt their return on assets.
Mondelez is extremely similar to Kraft in many ratios, yet seem to have a slightly higher edge in areas like gross profit, return on assets, and asset test ratio. However, they have proven to have a more aggressive and riskier strategy with debt-to-equity ratio and times interest earned. Therefore, we believe Kraft is overall the better company, as they have shown large development and continue to improve even though they had a rough 2018 year.
Lastly, we just have a slide with some of the sources that we used to help gather this information. Thank you for listening.